spin-off.
Today we have Sam Wong from Nexus Capital that is presenting the topic how to level up your business cash flow with alternative financing. That's all about the money. I think interesting for everyone. He will present around 40 minutes, so please keep your mics off during this time so he is not disturbed, and we keep all the questions for the end. So make a note or type it in the chat so we can then go through the Q&A session very efficiently. So yeah, welcome. Thanks to everyone for joining. Thanks, Daniel, for setting it up. And also, of course, to Sam for presenting today. I think that's all from my side. I will hand over to Sam for the presentation.
Okay. So today's topic is actually about cash flow. So basically, I will share about how to raise fund via alternative financing. Alternative financing is something that is already existed in Malaysia's market for some time, but then it's not widely known, I think, to many people, right? In the past, what we know about alternative financing is that it is a financing that helps businesses to grow in terms of working capital or even fundraising and stuff like that. Okay, so how to level up your business cash flow with alternative financing? Okay, so my background, I'm actually an MBA holder in international business in PGSM, RMIT, Australia, Economics and Finance. So basically, my background in financing has been 9 years in banking mostly. So I was from UOB Bank, commercial banking, Hong Leong Bank SME, and then Auraji Corporate Banking. So basically, I covers customers from SME to corporate banking before jumping ship to funding societies. Funding societies is a P2P platform that helps SME businesses, but the loan amount is rather smallish compared to corporate banking and stuff like that. My customer basically ranges from SME, commercial and corporate customer from few millions to billions terms. In Malaysia, when we are talking about businesses, the SME life cycle, there are actually different stage, right, of businesses. And in Nexus Capital, we're actually supporting all stage of all these businesses. So stage one is when during the idea inception, when you have the idea, but you don't have the funds to grow your business. Number two, we are talking about early stage, which means typically 1 to 3 years, which is actually can be supported by P2P or microfinancing. So the product itself, later I will actually go into it in details, each of the platform and what does it does. Okay, for stage 3, we are talking about expansion, meaning businesses that are normally 3 years and onwards. Actually, all of us know, actually banks nowadays, from traditionally, they only do businesses, they only grant loan to businesses that is 3 years and above. So anything that is below 3 years, actually, they don't really entertain much. But because of recent years, these 2 years, when P2P and ECF, all this, they open up for new companies. So actually nowadays, banks also did grant loan to businesses that is more than 1 year and above. So between 1 and 3 years, but not many does so. So a lot still very conservative, right? So mostly they are still looking at collateral, looking at what security you have to offer to them. So that's why normally businesses, they are 3 years onwards, only they are more suitable for ECF, bank loans, factoring, invoice financing and stuff like that. So in terms of equity finance, crowdfunding later, for Daniel specifically, I will share one case study, which I have done last year itself, showing that how this company using its equity to raise funds and how do we calculate the basic valuation of a company, right? So, and of course, stage 4, going into public. Going public means you are already a listed co. So what kind of fundraising do we provide, right? So basically, I also in touch with a fundraising activity for a local public listed company, but it's actually listed in Hong Kong. So we are actually the cornerstone of that company. Basically, we fund them all the way until listing and ensure that it's listed all the way. So in financing, there are two types. Today, we are actually talking about alternative financing, but traditional financing is what everyone knows, which is the banking part, right? So everybody knows how to go to the bank, but the problem is bank nowadays, they have been always collateral, security, and they only do limited financing, such as land financing, property financing, asset financing, and such, right? And of course, every banks have their own criteria, have their own specific industry focus, right? So not all banks favor certain industry. For instance, oil and gas is a industry that banks favor the least. But of course, there are also some companies, financial companies that support this industry as well. So it's not to say sometimes you are in certain industry, it's actually very hard to raise funds via bank, but we also have other way for you. So some of the way are actually invoice financing, startup fund, equity financing, credit leasing. This is what my company does currently. Okay, we call it Capital Booster. So this is short-term loan, short expensive term loan, but then we only do short terms. And then of course, there are P2P, which is where I come from. Like I mentioned earlier, I come from funding societies. So funding society is actually one of the larger P2P platform in Southeast Asia at the moment, right? So by doing just microfinancing and also small term loans. So basically how we do it is that when a customer comes to us, we will actually gather all the documents and we will actually send it to my personal credit team. And of course, myself, I will personally have a look at it also. What we do is that we have a look at what is this customer industry in, what are the strengths, what are the weaknesses, and how do we raise funds for them via what platform, right? So because like I mentioned earlier, some industry is favored by certain banks or certain financiers. So when we know about it, we will actually guide them better in terms of getting to the right platform. And of course, last but not least is about negotiation. Once the financier is agreeable to finance them, we'll actually negotiate for the best rate for them. So today, what is alternative financing, right? So alternative financing is a non-traditional method to get funding from the bank. In the past, all of us only know about banks all the way. So banks will be the cheapest, but does bank finance all of you? According to Malaysia statistics, right? Last year itself, we are talking about 2020, 80% of people or businesses who wanted to get TRF failed to achieve so. So when they fail to achieve funding or fundraise from the banks, what do? Most of them do not have a second solution and they do not know where to go. But in fact, there are actually many ways to help them to fund. Of course, the cost of fund is more expensive, but to me, it's about survival, right? In 2020, 2021. So businesses now have to survive before they can go further. Some of the benefits of alternative financing will be no collateral, definitely. Shorter time frame, as in repayment is short, so you can save interest. Smooth process, I wouldn't say so, because nowadays the demands are increasing. So it takes time also to process. But then typically comparing to a commercial bank loans, right? I myself is a banker. So some loans take 1 to 3 months, or my longest loans, corporate loan, up to 50 million could take up to 6 to 10 months to just to process it, right? So sometimes all this alternative financing will be faster in terms of turnaround time. So mostly about 3 to 4 weeks. Types of financing, this is the one that I will go into it in a more detailed way, one by one. So later I will show some case study on ECF, equity crowdfunding, and invoice financing. So for P2P also, I will actually share what's the difference between P2P and ECF, because both are actually regulated under Securities Commission and not under Bank Negara, right? So for startup fund, there are also some samples. Later after this session, I will share some link for you guys where to actually get all this startup fund. And of course, last but not least, will be credit leasing by my very own company, Nexus Capital. So which is what we focus, like I mentioned, the short, expensive term loan. But then expensive, but more, when I say expensive, it's actually more expensive than the banks, because banks is always the cheapest. The reason is very obvious. Reason being is that banks' cost of fund is always the cheapest because they raise fund from the public as well. Okay, but what happens is that we save money in the bank, they just use the bank's money to lend it out, right? So they have a lot of access to the cash. That's why they can lend it up very cheap. While for others platform, it's also the same. When they raise it more expensively, so they will also charge you more expensive. That's the only difference. So for startup fund, actually it's mostly microfinancing. When we mention microfinancing in Malaysia, it's around 50 to 100,000 ringgit Malaysia only, right? So the benefits of it is that any business at any stage can actually apply for this. When I say any business, is that including all those small businesses, enterprise, sole proprietor, sendirian berhad, and so on. So it's accessible to all. But the problem is it's only 50 to 100,000, right? And minimally, you need to operate for at least 6 months. So this kind of microfinancing actually benefited a lot of small players, such as people who sells on Lazada, sells on Shopee and stuff like that, right? So as long as you have actually 6 months proof of income on bank statement that you are running this business, you can actually use it to grow your business and as stepping stone to the banks after 1 year and so on, right? So when we talk about invoice financing and factoring, this is another way to raise funds. So basically, when you have delivered, but your customer need some time to pay you, let's say 90 to 120 days, right? So what you do is that before you are able to collect the funds, you can actually sell your invoices to a third party. So meaning to say, financier will finance your invoice, they will pay you in advance until your customer pay you back, so that you can get the cash flow in advance. So this is one of the tools that I've been selling aggressively in this one year pandemic. Because my reason is that a lot of customers actually have been playing the dragging game, meaning to say they got cash flow, but they do not want to pay, or they want to pay it later. So it becomes that a factoring or invoice financing company have all these tools. So for invoice financing and factoring, right, there's also another thing that we can do, which is through something called trade credit insurance. So I would like to share a bit about trade credit insurance. Right. So what is invoice financing? What is trade credit insurance? And the exclusions and so on. So the flow of invoice financing is very simple. It's like this. When you actually delivered something, right, you will actually charge your invoice to the SME. So after you charge it to your customer, you deliver the invoice to your financier. Financier will actually advance you up to 90%, right? So, but when during the repayment, let's say after 120 days or 90 days, customer will actually repay to the financier itself, right? And the remainder will actually be dispersed back to the SME that borrow the funds. So this is the normal way that we know. Okay, this is the basic process flow, which means normally you only raise fund after you deliver the goods, right? So for some case, let's say you got a very good project. For instance, recently I actually came across one. It's actually supplying PPE to Pharma Niaga, right? So, but it's a first timer contract. So this guy doesn't know how to do it, or rather he does not have the fund to supply it to Pharma Niaga. So he came to us. What we did is that we helped him to finance the pre. So when we talk about factoring, there are actually pre and post factoring, right? So pre meaning to say the contract is not being delivered yet. We are the one who advance them to let them start the contract and supply to Pharma Niaga. So once they're supplied to Pharma Niaga actually needs some time to actually pay it back to them, right? This account will be assigned to us. When Pharma Niaga make the repayment will come to us before it goes back to the customer. And better still, Pharma Niaga, because of its reputation, we are able to source for something called trade credit insurance, right? So trade credit insurance is something that is very common in actually Singapore, Indonesia, country that have a lot of international trade. But too bad Malaysia is not very active in terms of import-export yet. Our import-export level are very low. So that's why this trade credit insurance is not a product that is very familiar. But right now we are trying to sell it and make it make it viral in the market because it's a good product. How good is it? Okay, covers two things. One is called insolvency. One is called default. Okay, and covers up to 80 to 90% of invoice value. What does this mean? This actually means that if today you deliver something to your customer, let's say just now the case that I say Pharma Niaga, and today if Pharma Niaga actually fail to pay you, okay, insurance company will take up this claim and actually pay on behalf of Pharma Niaga. So you will not lose anything that you have delivered. But in fact, what you have to pay is really just a small premium, insurance premium, to actually cover yourself and also cover your customer, right? So this insurance company will also provide debt collection services in case of your customer fails to pay you. And also they will also help to do some credit check on the list of customer. So this is, we don't go through this. So basically TCI trade credit insurance, what to take note in insurance policy is that the policy start date and end date of each policy, the credit limit of insured customer, the terms, the extension period, your invoicing period, your waiting period, your insured seller name, your indemnity, and what's the exclusion cost. This is very important. So go back to here is that this is actually one of the sample. Let's say today you deliver terms, your credit terms are supposed to be 30 days only, right? So your original due date is from 1st of January to 1st of February, right? So the maximum extension period will be 90 days. This, we are talking about sample. Let's say original is only 30 days. So your customer are supposed to pay you here, right? But we have a maximum extended period of 90 days. So it's come to May 1st. So from May 1st, we are almost confirmed that your customer will not pay you, right? Because it's supposed to be in February. So when come May 1st, we'll start the claim, right? We will start the claim. And from this period, the claim period is about 5 to 6 months. It's rather long, okay? And your end of waiting period is actually somewhere November, or actually earlier, it might be December, it might be October and so on. So when you have a claim, you are able to claim back all this money that you have delivered to your customer and you will not lose anything. So this is the benefit of trade credit insurance. Just now we talked about exclusion clauses. Let's say there's any exclusion clauses that you have to pay attention to, mostly is on insolvency of insured, trade transaction dispute, meaning to say I delivered this item to you, but then this item is not recognized by you. So third, government agencies. Let's say today's this claim is against government agencies, and then consignment goods, contract repudiation. Customer is related to insured, meaning to say today I supply to you, you are actually my cousin to cheat this trade credit insurance. So this is what will cause it to be excluded. So last but not least is the interest on amount outstanding. This trade credit insurance, they only pay on amount outstanding, meaning to say however much that customer owe you, they will only pay on it. And they will not pay on extra interest. And go back to invoice financing. These are the process that we mentioned just now. Okay, so it's very simple. When you send your invoice and goods to your customer, you will submit the invoice to your factoring house. Okay, factoring house will disperse the amount to you, and customer will pay to factoring house. And last but not least, factoring house will pay the remaining back to you. So it's a very simple process. Okay. So the next product when we have to come to is crowdfunding. So in Malaysia, we have actually two types of crowdfunding. One is called P2P, one is called equity crowdfunding, right? in P2P, what we call is actually a peer-to-peer financing. What they do is they issue a debt to a group of investors, and then they earn interest based on the investment. Okay, on this thing, in order to achieve this thing, you need a platform to do it, right? So basically, the platform consists of a group of people that connects individuals to small businesses. How individual invest in the platform is very simple. It's actually through the way of escrow account, which means they will actually bank into the platform through escrow account. And then this money will be actually dispersed through the platform to all these small businesses. And in return, individual will actually earn some interest. So the interests are typically from 12 to 15%. And ultimately, the regulation says it's up to 18%, right? So if you go to any platform currently, such as funding societies, Fundestic, and so on, there are actually many nodes that is going on, meaning to say that, oh, this particular customer, they need 1 million. So how much to crowdfund? So in order to crowdfund it, individual can come out with money as low as 100 ringgit, 500 ringgit, 1,000 in order to get the 1 million that this SME want, and then they will disperse it all together. And of course, in return, you will get back what is agreed by this customer, meaning to say the interest rate, let's say, is about 12%. For every 1 million that you give out, right, the return is 120,000. So if today you are actually investing 100,000, for instance, so you actually get back 12,000 per annum. This is what it means. So for equity crowdfunding, it's a little bit different. Equity crowdfunding, meaning to say they will issue equity to a group of investors based on the valuation of the company. So what does it mean is that today I'm actually sacrificing or letting out my equity, my shares of the company in order to raise fund. So most of the time, like what listed co does, they will hold at least 50%, right? Or even 51%. So the rest of it is actually used up to actually raise fund in the market. So basically, it's the same concept as listed co, but this is a sendirian berhad, right? So it's the same thing also. You can earn capital gains or dividends from this thing, and there are no predefined repayments, meaning to say unlike debts, because debts in P2P, right, when you agree to, let's say I give out this loan, is repayable within 6 months. Within this 6 months, you must pay back this loan, or else it's a default. But for ECF, let's say you don't pay within this period, it's not considered as a default because there's actually return in other way, such as dividend or even your products. So later, the case study that I show you that I have worked on last year, it is one of the products that is the repayment is a bit different lah. Repayment is actually in F&B because this is in F&B. So meaning to say, if you are my investor today, you can come to the restaurant and makan for free, just using voucher, right? Something like that. So just now mentioned, peer-to-peer is a short-term investment. Lower interest, investment diversification, right? Whereas equity crowdfunding is more to venture credibility and more to brand awareness. You want people to know you, right? So only businesses with that kind of brand awareness, you can achieve this with ECF because you must be well known in order to gain public investment, right? So I'm going to share some case study on ECF now. So this company, not sure how many of you have heard of it. It's called Morgan Fields. So this is one of the companies that I've done last year, ECF for them. So they managed to actually raise 3 million and 1 million being their own investor, right? So we actually now ECF, there's something going on. It's called MySIF. MySIF is actually a campaign from Securities Commission. So Securities Commission will have this initiative to help to fund the market. So meaning to say, for every deal that's going on, Securities Commission or government, on behalf of government, you will invest 20% in it. So which means only 80% is raised from the market and 20% is actually raised from the government. Okay, So basically, this is the deck that we use to fundraise, okay? For Morgan Fields itself, the deck that we use to fundraise using public, these are the information that are available. We need to say what do they do about us. What's their unique selling point products? Of course, it's their sticky bones. And what do they do basically, right? How is the outlet like? So I'm not sure how many of you have been to Morgan Fields and what's the vision and mission. Okay, these are typical things that you have to include in the deck if you want to fundraise, because everything is actually transparent, right? So it's actually show who is the owner here, how many percent. Okay, and business division, what does this Morgan Fields Holding do? So they have trademarks, licensing, trading arm, and ownership of Morgan Fields Express. These are the things that actually help bring revenue to the company. So this is the future, the digitalization of business. I'm not sure if you all have downloaded the app before. Morgan Fields app allows you to transfer beer from one another. Meaning to say, if today I buy 10 beer already, okay, I feel, Daniel, are you going to Morgan Fields? So I can actually transfer 5 beer to him and belanja him, something like that lah. So this is the first thing that is done in Malaysia, and it's not available anywhere else. Maybe you all can try and play with it. So in terms of Morgan Fields mobile app, it actually helps to monitor their delivery business, for being one. Number two, which is the unique thing that I told you, is about the beer transfer thing. So, okay. So actually, Daniel do have a question to me. So normally, how business do their valuation, and how do they raise fund based on this valuation, right? So valuation are actually done in a few ways. Some of the traditional business, they actually use their earnings in the past to times average earning, I would say average earning for, let's say, past 3 to 5 years, and times with PE, right? To actually get how many times of their potential earnings in the future. While some of the businesses that is involved in tech, they are actually using future value to do it. For instance, Grab is using future value, right? Lifetime value. So on the book itself, it doesn't make sense. So for Grab, for instance, they are losing billions of money, right? But their valuation, if you realize they're going to SPAC soon, SPAC means they are going to list in US via this vehicle called SPAC. And their valuation are estimated to be at 40 billion. So you will ask, how do they count 40 billion, right? So for Grab itself, it's very unique as such that it's a tech platform. So what they do is that they use a future value to count it. Meaning to say, if today, because I myself, I use Grab a lot. So if let's say today, 1 month, I'm spending, let's say 2,000-3,000 on it, right? They are using the lifetime value of it. How in the future, 5 years, 10 years, how much are you going to spend on Grab itself, right? To determine the value. So for one user, easily is, I would say 100,000 easily for a lifetime value that you are going to spend on Grab. So they are going to combine all this value and times a certain PE to come up to 40 billion. Of course, I haven't go detail into it because it's not listed yet. So once it's listed, all this info will be available. You can actually study how they do their valuation, right? So for Morgan Fields, it's it's a bit similar to Grab. They are using future value as well. So hence you can see potential countries in 5 years, how many countries they are going to expand to, right? For instance, Indonesia, Thailand, Vietnam, Philippines, Cambodia, Taiwan, okay? Australia, Korea, China, Malaysia. So total 54 outlets. But actually right now, they only have Malaysia. Sorry, Malaysia, China, and let me see, Indonesia, if I'm not wrong. Only have 3 countries. But potentially they are going 54 outlets in 1, 2, 3, 4, 5, 6, 8, 9, 10 countries in total. Right? So these are the profiles of the people. Okay, so these are what determine your valuations, Daniel. You can have a look. So these are all based on projected estimated figures, 2021 onwards, 22, 23, 24, right? Based on each of their revenue stream, their tech fees, their licensing fees, their revenue, the trading arm, minus all their costs, right? So in this case, they are using EBITDA to do it. EBITDA means, say, earnings before interest, tax, depreciation, amortization. So in estimated 2021, they're estimating they're getting a 4.3 million, 4.289 million actually. Value times a valuation of 8 times to come up to 34 million. So this is the valuation, right? So by using this valuation, 100%, so you can divide it by, let's say, 1%, how much is it worth, and use it to actually raise fund for the market. So these are some of their expansion plan, how many units. Okay. So the offer, what is the offer? So their minimum target is actually 500,000 to raise. Maximum target is 2.25 million. So of course, type of shares, there are different types. Today, they are using redeemable preference shares, RPS we call it. And then there are also irredeemable preference share, IRPS. And then there are RCPS, redeemable. RCPS is redeemable convertible preference share, RCPS. And then there are also irredeemable convertible preference share. The difference is that they will give a period to this tenor, right? So redeemable and irredeemable, the difference is that whether you are able to get back all your principal by end of these 3 years, or you want to continue with it until the company have further action, such as listing and so on, right? So here it mentions subscription price, let's say 1 ringgit per RPS, and then the redemption amount. So redemption amount is how much? So today, let's say you're using 1 ringgit to buy, right? The redemption amount will come up to 145. And the period is 3 years. Meaning to say today I invest, let's say 100 ringgit, right? I'm getting back 145 ringgit at the end of 3 years. So this is what the offer is. And of course, your minimum investment, because your redemption mode actually is like this. So shall be made at the redemption amount, shall be paid by a company from 4% of company revenue or 5%. So they will let you know where does this money come from, where they generate it, and how they pay you back, right? When today you invest with them, okay? So they are also in the event of RPS automated redemption date, the redemption has not been fully paid by a company, made for entity, bullet repayment. So they also have something called bullet repayment, redemption amount. So in the end of the tenure, they'll pay you back in bullet. So minimum investment is actually 2,000 per lot, and investment block is 2,000. So what's the guarantee? Director's personal guarantee. So they will let you know who is guaranteeing, which is the guy that I showed you just now. So for this funding, 2.25 million that expected, we actually managed to raise 3 million, if I'm not wrong, for this customer. Reason being is that 20% are invested by government, Securities Commission, through MyCIF, MYCIF, which means 600,000 done. So their own investor is about 1 million, meaning to say people who support them from friends and family and circle like that. So total 1.6 million. So we actually only help them to raise 1.4 in total from the market. So total, they actually exceed their funding requirements of 2.25. They managed to raise 3 million. Right. There are also actually different things that they offer to the customer, which is called a dropship model. They call it investpreneur scheme. So dropship model is something that they offer to the customer and also their supplier to do profit sharing. So this is what they show. So source of income is let's say today you intro some customer, okay? You let's say invest 2,000 ringgit, right? You get 5 free half stack sticky bones for every 200 invested. So the value is 264.75. ROI is 13.24%, right? So you can actually, like I mentioned, the app that I show you just now, you can actually, they will credit it to your app. You can actually sell it to your friends or family or whoever that want to spend there, right? and just transfer it to them, then they will just pay you directly, something like that. So this is one of the way lah. So their exit strategy also very clear. Trade sales to trade sales or tag along on a sale of holding company, meaning to say some buyer who wants to buy them. This one is also in negotiation. IPO, of course, initial public offering, and end of 3 years, redemption of RPS, meaning to say they will just redeem everything, right? So the exit strategy is very clear for this company. So key takeaways. So this is what the key takeaways, right? So basically, this is a full deck of an ECEF, equity crowdfunding deck, of how you can raise fund from the public. So when it comes back to my product, which is called Capital Booster from Nexus Capital, what we offer here is a working capital loan of more than 1 million, no collateral, but of course personal guarantee needed. It's a 12-month program, and what we call it a financial springboard, meaning to say we use it to actually buy time until you are able to get financing from the banks or other platform. So in conclusion, alternative financing is what we are using to actually help SME, because we always need alternative for companies in case that they cannot get from banks. We'll help them to qualify until they can get loans from the banks, because ultimately banks are the cheapest. But the problem is banks are not granting you now. You're not just sitting there and not doing anything, right? You have to still do something on your cash flow of the business. So here are some testimonial from my customer. So it's from actually all sorts of industry also. I also have manpower. I also have construction. I also have timber. And I also have some, like for this one, WSS Team Force, they're actually doing supplying to government. I also have security company supplying security guard to government and stuff like that. Right, that's the presentation on alternative financing. Thank you very much, guys.
Many nights we prayed with no proof anyone could hear. In our hearts a hopeful song we barely understood. Now we are not afraid, although we know there's much to fear. We were moving mountains long before we knew we could. There can be miracles when you believe. Though hope is frail, it's hard to keep. Who knows what miracles you can achieve when you believe. Somehow you will when you believe. In this time of fear, when pressed so often proves in vain, hope seems like the summer bird just swiftly flown away.
Okay, thank you very much, Sam, for this very insightful presentation. We move over to the Q&A. See, two guys have written a question already. I'm not sure if these are answered in the meantime. Donnie was asking, what are the sources of the funds?
Sources of my funds is from private funding, own investor. We call it sophisticated investor. Okay. And then number 2 is crowdfunding is a deposit taking. Don't you need B&M license? Okay, crowdfunding in Malaysia is regulated by Securities Commission. So it's not under Bank Negara. So what Securities Commission regulates is things that is related to investment, such as, let me think, such as unit trust, for instance. Unit trust is regulated by Securities Commission, or anything that is to do with investment, actually. So this, in Malaysia, like I mentioned just now, there are two types of crowdfunding, right? One is called P2P, another is called ECF, equity crowdfunding. Both of them, one is actually in debt, meaning to say they give out loan. They themselves, P2P platform, they themselves do not have any money, right? So what they do is they take public money and lend it out to the SME, which is what the bank do. It's the same thing. But the only thing is that they take, bank also take from public, but the thing is in our savings account, and bank actually give interest to us, right? So the concept is the same, but crowdfunding give more interest rate. Reason being is because they charge it higher to the customer, and customer pay back higher. So that's why I mentioned in bank loans, you can only get maybe 6 to 10% at most, right? But in P2P crowdfunding, you can get 12 to 15% easily per annum. I saw, do you do financing in Sabah? Yes, we do. But problem is because now we can't fly over, and most of the time we require site visit. So it's a bit hard for us to do the verification now, because most of the time we need to go there and have a look ourselves, whether this is a genuine business. What are you doing? I mean, is it really a function business lah, basically? And then what's the percentage return for booster financing? So for capital booster, because we welcome a lot of sophisticated investor, so we call it high net worth lah, basically. So we take investment from 100,000 onwards, right? So basically now we are offering at a minimum of at least 2% per month. So per annum is around 24%, and these are fixed return. But of course, this also subject to your investment size, or actually how much funds you are putting with us, right? So we start with 100,000, we give 2% per month. So you can opt for minimum of 6 months, or actually 12 months investment. So as low as 6 months, you can get back about 12% for every investment that you do. So what do we do with this investment is like what you see. Sometimes we get this fund, we saw a good deal, we'll invest in that deal and earn more for you guys. And the remaining will actually be used to loan out to other customers and so on. Okay, what's the professional charges to help raise ECF? These charges, okay, for platform fee for P2P and ECF is similar. It's around 4 to 5%, right, of the total amount raised.
Usually, your financing, how long would it take to do the process and all those things, to do your evaluation?
For typically, it takes around 3 weeks to 1 month. But for ECF, it's slightly longer. Reason being is because there's a lot of due diligence to do, right? So in order to come out with a deck that is very sophisticated and it answers all questions, basically. So what we try to do in fundraising is that we try to answer all questions before people even ask it, right? So that it helps to clear your doubts, and it boosts your confidence, basically. Meaning to say, we know what we are doing, right, before we go fundraise outside, and what we intend to do with it, and what is the exit strategy and all this, right? So for ECF, typically it's slightly longer, around 1 to 2 months, but for others, it's considered loan. So loan will be slightly shorter times, around 3 weeks to 4 weeks for processing time.
Okay, thank you.
Jenny, we don't charge for due diligence. We don't charge for due diligence. We will do our own homework, meaning to say whether this deal is pursuable or not. If let's say this deal is pursuable, we will actually come to you and let you know the charges involved, right? But most of the time, during our DD time, it's actually on our own cost, meaning to say we have to invest to actually check on the credit report. For instance, when Morgan Fields say they have holding in China, right? They have China. So I have to spend money to do the China credit report to see whether this entity really exists. And I even asked my friend to go to Shanghai and actually take a picture of the outlook, the outlet, and see whether it's really working or not. Stuff like that. Yeah. So those we call due diligence.
Okay, I got one simple question now, the basic one.
Yep.
Regarding the microfinancing, for example, for startup fund, where do you go for these things? For people
Okay, just now I mentioned I will share the link, right? So one of it is called Aspirasi. It's by Axiata. Axiata is owned by Celcom. Okay. So they have these funds up to 100,000 where any businesses that more than 6 months, you can actually go and apply, right? So just now I also mentioned funding societies also does microfinancing. They also have 50 to 100,000. And then nowadays there's this thing called iPay88. iPay88 is a merchant. So, you know, every time when we go online shopping and then when we check out, you will see iPay88, right? So there's a merchant that is actually giving out microfinancing as well, 50 to 100,000.
I see.
Yeah.
Can you type all those in the chat group? The links?
No problem, no problem.
Guys, if you have a question, this is your chance to ask. Because you went through the presentation very fast because of the time given is so limited.
Sam.
Yes.
I'd like to know the reason is in regards to money laundering.
Yep.
Should your fund be from an illegal source?
Yep.
It will be traced back to the end user, the consumer, the businesses, and all those will be frozen. So the question is, how does a consumer, the end user, do the due diligence on that, your source?
Okay. In order to know whether you're dealing with with a safe party, you are saying regularized, right? You can always check who regulates them. So just now you all mentioned something. Don't you need B&M license, right? So firstly you need to know who can regulate them. So in Malaysia, financial are regulated by a few parties only. Okay. One being Bank Negara. Okay, number one. Number two, Securities Commission. Number three is actually the state government of each of the state government, meaning to say they can give out money lending license, all this, right? And then of course, you have to know what is also under Bank Negara, such as just now where I mentioned credit leasing. So Nexus Capital have a credit license from Bank Negara itself, right? So this credit license is the same with what you have heard in the market. It's called Hubsing Credit or Risk Leasing, and so on. But the difference is that the business they can conduct are very different. For instance, leasing company, they can only give loan to machinery financing or anything that have to do with leasing, right? Like BMW credit, they can only finance car, hire purchase, right? So some of them, they can finance car hire purchase, but they cannot finance, let's say, construction machinery, right? Like all those construction machinery. So you have to know each of this company is regulated by who, number one. Number two is what they can do, right? You can use their money to do what? Basically, it's like this. So you can do your own research online as long as you can find a name regulated, right? And of course, third thing, when you sign the agreement, right, you have to look for this sentence, right? Is regulated by what X? ACT X in Malaysia, right? Reason being is why when you see you are afraid whether they are legal or not legal, right? And at the same time, they are also afraid that if you don't pay back and you all go to court, and what is the terms that you all have agreed on, and what you all will fight on a court based on. So the law is based on what law? This is very important, right?
No, I think basically is this under the Money Laundering Act, are you a reporting institution? Do you have to report suspicious transaction to Bank Negara? Say, for instance, a client investor come with a suitcase of 500,000. Do you just take it as a deposit, or what? Or you reject it?
Okay, that's why that's why it's a very good question. In case we don't do that, because all the cash that come to us is already in the banking system. That being one, we don't take cash, for instance.
Okay.
100%. So number two is that even if this cash come, right, when we want to bring to the bank, we have to declare it, right? So what we declare it under, and of course, end of the day is about receiving and then giving it out to the market. You are worried that this thing will be illegal, right? So what I advise you to do is that you can do your own due diligence, means to say, first thing, ensure that this money is already in the banking system, so that when it comes to you, is already considered safe, basically. And if you yourself, you feel there's something dodgy, you can always ask the company this thing: do you all have an escrow account, or what do we call it? There's a body that do it one, meaning to say a third party that holds this account on behalf of the company.
Trust.
Yeah, trust. It's also considered trust also, so that this third party can actually help to audit and regulate this company on behalf also. So for us, all our money dispersed and we receive and disperse money through this escrow account. We call it trust account. You can also call it trust account. Yeah, and it's regulated by a prominent body. Is a government-related body, but I can't remember the name at the moment.
Absolutely, yeah. Yeah, I mean, for me, just to remains to thank everyone, especially also Desmond. I think a beautiful initiative that you launched with your team, and I'm happy that we really were able to collect a lot money to help people in need, right, for food. I think that's a beautiful initiative. Thank you so much. Thanks to Sam and Nexus Capital for the presentation and all the information and insights that we got. I hope it helps a lot of you guys out there. If you need support, then you know Sam, I can reach out to him directly. Thanks to everyone for joining today. As always, I'm mentioning it in the end. If you have a specific topic that you're interested in, then please let us know, myself or Daniel, so we can see if we have a speaker, or I think Kenny also will take over some of the roles, I heard. Yeah, also Kenny, please inform him. If you have a specific topic you're interested in, then we can look out for a speaker. Hopefully we have someone in the group here, because now we have quite a lot of industries. Or if you are interested yourself to do this, please also let us know so we can arrange for that. And finally, thanks to Daniel for giving the opportunity to have these webinars. That's it from my side.